All right, welcome back to another episode of the Black Bullion Show. Now, it usually takes a while for people to let their words catch up with their actions. Now, that's why there's so much truth in that saying to watch people's actions rather than to listen to their words. Now, in the case of Warren Buffett, we've heard his words and now we're seeing his actions. Now, in a silo, it's a pretty incredible turn of events with this whole gold and bank thing. But in conjunction with him buying Barrick and also selling bank stocks, it tells a bigger story. Now, find out what that is shortly. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. Now, we have a new one here from Jim Rickards entitled Bank Woes, Ghost, and Gold. Now, Jim always has, a really interesting way of making you go, oh, didn't see that. Well, he doesn't fail to do as much in this article here. So let's get into it. We'll start here. But like Banquo's ghost in Shakespeare's Macbeth, gold keeps showing up as an uninvited guest at the dinner table to haunt the central bankers. Economists may have abandoned gold, but investors have not. And perhaps the most famous investor of all is now betting on gold. In the past, Warren Buffett has mocked gold for having no utility. Why dig it out of the ground only to rebury it in a vault, he asked. Incidentally, Buffett's father, Howard Buffett, was a U.S. congressman. He strongly believed in the gold standard and was one of the last remaining public officials who argued for it after World War II. The apple fell pretty far from the tree in this case. But it seems that Warren Buffett has changed his mind about gold. Buffett dumped much of his stake in JP Morgan and Wells Fargo Bank and actually pay close attention to that, Wells Fargo. Keep Wells Fargo in the back of your mind. Let's continue. And made a huge $563 million bet on Barrick Gold. There are fundamental reasons for this, including the fact that bank earnings are likely to suffer both because of a flat yield curve. Banks can't make profits on a spread when there is no spread, and accumulating loan losses from the Ronies issue and coming defaults. Of course, Barrick Gold is a beneficiary of rising gold prices, which have enabled it to pay off most of its debt. So it's well positioned to go on an acquisition binge, buying smaller miners with proven reserves. But there's another way to think about this trade with more profound implications for investors. Banks create money by making loans and adding the loan proceeds to borrower accounts through a few accounting entries. The banks create paper money. But gold miners create money by digging up gold, processing it, and selling it to refiners. In other words, the gold miners create hard money. Buffett is signaling a loss in confidence in the dollar. He is getting out of the paper money business and into the hard money business. Now, as I said at the top of the video, Buffett's Barrick and bank moves in concert with one another may be more incredible than we initially thought, or at least more than I thought. Now, is this a case of Buffett's actions running in contrast with his words? Well, what's even more telling here is that Buffett got rid of Wells Fargo for Barrick. Now, Wells Fargo just put out a pretty interesting report they guys may find pretty interesting. Now, this comes from Kitco. Gold price bull run points to lack of trust in the world's monetary system, says Wells Fargo, which is pretty ironic given what Warren Buffett just did. So let's get into it. This year's historic bull rally in gold points to a much bigger problem, a growing lack of trust in the world's monetary system, according to a report by Wells Fargo. There are several reasons why gold has rallied, hitting new all-time highs above $2,000 an ounce for the first time in history earlier this month. Gold has had a great 3-year run. 2020 has been especially strong, with gold gaining roughly 35% year to date, wrote Wells Fargo head of real asset strategy John LaForge on Monday. Throughout the year, we've explained the 3 main reasons why. We believe that gold's main price drivers largely boil down to 1. Low real long-term interest rates, 2. Excessive global money printing, quantitative easing, and more recently, 3. A weakening US dollar. However, all those reasons are not the original catalyst, which might actually be the big elephant in the room that the markets are missing. There is a 4th reason related to the other 3 that is the elephant in the room. It's called trust. Trust in money over the very long term has been a fickle thing. No paper money has survived time, while gold has. Gold is history's trusted store of value, said LaForge. The surge in gold prices this year could in fact be a sign that the trust in money and the trust in the current monetary policy system is eroding, the head of real asset strategy pointed out. Our monetary system is working today, and it is largely trusted. With that said, the recent rise in gold prices and cryptocurrencies may be a sign that a small but growing contingent is questioning the world's monetary system, LaForge wrote. So, is Warren Buffett a part of this small but growing contingent? And is he a part of it knowingly or unknowingly? Well, you guys let me know in the comment section below. I do think that there is a growing, still relatively small, but growing contingent. We've gone over so many articles on this channel pointing to millennials, for example. For the first time in decades, 20 and 30-year-olds are going into coin shops looking for gold and silver. We've also talked about central banks for pretty much 10 years in a row have been net purchasers of gold after a decade of being net sellers. So something is going on here that is causing this small but strong contingent to grow. Now, is it trust? You guys let me know in the comment section below. Thanks again for watching. Please hit that big red subscribe button down below. Please hit the like button. It's Black Bullion.